Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Friday, May 14th. Looking quickly at the futures, a lot of green across the board. ES up 0.6, Nasdaq up 1%, small caps 0.75%, oil up 1%. Gold and silver about 0.5%, but copper is the only red that I see on the board, down about 1%. Okay, let's get into it, kind of recap our plan from yesterday, and then look ahead to this afternoon and see what we can figure out. Remember, it's Friday, very important day as far as trading goes, especially in the afternoon from 2 to 4. To kind of get a gauge of risk sentiment going into the weekend. So that'll tell us a lot about, what trading psychology is out there. Do people want to be more risk off heading into the weekend, or are they fine, getting long right into the close on a Friday? So I'll be very interested to watch that this afternoon. Now, yesterday we refocused on the McClellan oscillators. We said that they were stretched to the downside. We said that we didn't want to get caught with a bunch of shorts into the hole. And we said that yesterday we wanted to scale out of our shorts and be tactically long. That scenario played out great. Now what I want to see in these oscillators is have it come up in here to, towards the zero line, whether it makes it up to, 15 or 20, doesn't really matter. Could even be a little bit less, negative 10. You just don't want to see it down at negative 60 when you're trying to recycle a short. That's not good risk reward down there. The farther you're negative on the oscillators, the higher the likelihood of a snapback rally that you just won't be able to react to, and you'll get hurt on that. So the idea now is to let this bounce play out and then find a technical location where we can recycle shorts. I think we are going lower. Obviously, if you think we're going higher from here, maybe to new highs or whatever, you can anchor longs in here, where we ended up yesterday or even before. This is the New York oscillator. Let's look at the Nasdaq. Same thing. We went down in the negative 60 and we got a little bounce yesterday up to minus 50. Quickly looking at SPY, no real changes. I mean, we basically had an inside day. We came down, tagged the 50, that held, and then we had a little up day yesterday. The thing to watch on SPY is recapturing the trend line and recapturing the 20 EMA. Here's the 2-hour chart. We had this first leg down where we tagged the 50. Remember, the gold is the same as the 50 EMA on the daily chart. And yesterday, we had a gap up. They reached up to the prior gap from, what would that have been? Wednesday. Reached up. You can see it tagged it twice, but then fell back below 410, which was a very important level as far as this trading range went. Now, I looked pre-market, and at 6:20, as I was starting the video, SPY was trading at 413 and change. So up here in this gap. So the scenario that we're going to have this morning is having, opening inside the prior gap, which runs up to 414.25, but then we're going to have a gap below that goes all the way back down to this 410.50 level. So it's going to be kind of tricky as far as navigating that open. If you got long yesterday, you're sitting in the catbird seat. If you got long down here or had gotten long down here on Wednesday afternoon, then you're in the catbird seat and you can hold on to those longs and kind of navigate it this afternoon. And then you can personally decide, do I want to carry that long over the weekend, or do I just want to take profits, have a relaxing weekend, not worry about futures gapping down on Sunday night or whatever might happen, and then pick it up on Monday. But for those that don't have any position, what are they going to do? Gap it and then make a run to either fill this gap up to 414 or even go up to this gap up here. That's within the realm of possibility. So that's just going to have to be a play it by ear. But then remember, this gap was not filled yesterday, and then you'll have an opening gap this morning. A lot of times on those gap opens, they like to, ram it down right away, fill it, scare everybody, and then reverse it. So that's just having a feel for it on short time frames if you're going to try to trade that. It was interesting yesterday. I just want to make this final note on SPY. Our game plan yesterday, I would say, worked out 95%. The only thing that did not work or didn't really plan on is SPY was the only index that did not come back and fill the gap. It reversed right here at 408. So a gap remains below. But for the other indexes, as we'll see, those gaps got filled. Here's the Qs on the daily chart, very weak, still below all the moving averages. Q's got a lot of work to do to get back on the right side of the chart. What I'm expecting, over the course of the next week is to put in a lower high and then roll over. What would change my mind is, of course, recapturing the trend line. And this is yesterday's action on the 2-hour chart. Here was the gap down from the other day. And really all the Qs did yesterday, as you can see, is consolidate. I mean, it's a fairly wide range. I mean, it looks small, but it's from 321 to 317. That's a $4 range. Certainly tradable on a 5, 15, 30-minute chart. We did have a little reach up, but that failed. So today, being up 1% in the futures, I looked over on QQQ and it was around 323, which is right at the bottom of the gap. So again, going to be a little tricky on the open because we've got a gap above up to 325.31, and then we're going to have a 1% gap below that's open as well. So does it go up here, gap and go and just finish strong, or do they fade the gap right out of the gate, try to come down and fill it, then reverse? But as far as on this chart, I see 327 as a big level, and I see 324 as a big level. And we've been talking about 324 for quite a long time. If you go back in the chart, that had capped a lot of advances over the course of time. If you look back in the chart, that was a big level. And you can see here that price gapped above to finally take it out and run up here. So 324 would be a big level to close above today. Maybe fill this gap, come into 327 and possibly stall there. You can see that was resistance back here. And don't forget, the gold EMA is the 50 on the daily. I would be surprised if Qs just came right up and took out the 50. That would be a significant technical event. But you can see it's curling down. I expect that to be a problem for price on the Qs. Let's look at the 30-minute chart. Very, very interesting. As far as tactical trading, I mean, we had this one dead to rights. Whether you executed around it, made a bunch of money, execution is a whole different thing. But having the plan is, part of the process. If you've got an idea of where the support and resistance levels are, that's a first step, and then executing around those levels is the key. So we had the gap up, and then we had a perfect touch of the prior gap that was rejected, and then they faded it all the way back down and actually filled the opening gap here. So very objective level here to take a shot on the short side against the gap with a stop just above, and you got to ride all the way back for a complete gap fill on the downside. And as we discussed in the morning note and at noon, that would have been a place to cover your shorts and get long. Either get long for a day trade for the balance of the afternoon, or to get more strategically long, looking out in time and saying, "Hey, I'm at a good base here at 317. Set your stop below, and then see how high the price can take it, given the oscillators were stretched to the downside." So this plan worked out great. I mean, they don't always work out that great, but I'm very glad that it did. Now today we just talked about opening up in this 323 area. So we've got 324 as being resistance, and then 327. Moving on to IWM, again, another inside day. Again, price below all the moving averages on the daily chart, with them not only below, but turning down. So those will be that cluster of moving averages turning down, and the combination being below trend. That's going to be some stiff overhead resistance going forward. Again, IWM, we had a great plan set up for that. Really the same plan across the board. We gapped up higher and we ran up into 218 that was rejected, came back down for the gap fill. And here you can see it. We had it on the fibs. We got the gap up, run up to this 217 that coincided with not only technical resistance, but the 618 fib level. And then they pulled the rug and came all the way back down to fill the gap. Again, a good, short at resistance, buy at support. Short at resistance, buy at support. If you keep those ideas in mind, then you won't get hurt, putting your stop just below or just above, depending on when you enter. And then we got to push into the close. So today, I looked at IWM, trading at around 218 in the pre-market. I think if it holds 217, longs would be in good shape, looking for a push up towards 219, 220.50. And then you got some resistance a dollar higher as well, up at 221.50. So keep in mind again, there's going to be a gap below, and the interesting thing on the IWM is there's no gap above. There's no gap to fill on this chart, so there isn't really any big technical impetus, no unfinished business to take care of. So we don't really have any, gaps to target on this chart. They were all filled earlier this week. So key off of 217 as a pivot, and then north or south from there, keeping in mind that there'll be a gap below on the open if this pre-market surge holds. Facebook, interesting day. Really no changes, technically speaking. 305 was that breakout level that we briefly dipped below, popped above, and now closed right back on 305 again. So from my perspective, bulls are okay north of 305, and bears maintain control below 305. Notice there's a gap to fill up here, pretty far away at this point. I wouldn't expect that, anytime soon, possibly next week. But there's a gap here roughly between 315 and 319. Also note that this 298 corresponds to the 50-day on the daily chart. That should be support. If the bears can break below, then we go down to 295 or lower. Apple did what it had to do yesterday from a technical standpoint. If we look over on the daily chart, 124 was a big level. Gapped higher. This is the gap from yesterday, from 123 to 124.50. This is the gap from the prior day on Wednesday. Came up and filled it, so I'll remove that going forward. And now I assume Apple is higher along with the rest of the Qs being up 1%. So today, I think this 126.50 to 127 is a very big level. If it can pop that, then we just go back to the other levels that we've been trading against all along. This 128.50 will be overhead resistance. And notice that we've got downtrend resistance there as well. And if it were to recover that, then I think it's off to the races to fill this gap and then come up here and fill this gap as well. This will be the critical juncture, this 128.50 with the downtrend line and lateral resistance as well. Longer term, it's got to hold 124. That's a key level on the daily chart. So if bears can get it back below 124, then I would say lower. Tesla was a really interesting one yesterday. We had been talking about this. So while, the Qs had a bounce back day, Tesla was nothing but red all day, down 3% here on the daily chart, cut right through the 200 EMA like it wasn't there, and came down to this 560 key support. That's what's got to hold. 560 has got to hold for Tesla bulls. And, I think, I don't want to say, I've been thinking this for a while, but, have we achieved peak Elon? I think he pissed off a lot of people yesterday with that Bitcoin that Tesla was no longer going to take Bitcoin as payment. And, after more or less pumping it, we're putting Bitcoin on the balance sheet. Bitcoin's the future. We're going to start taking Bitcoin. I mean, this was just 3 weeks ago. And I don't know if somebody from the government, it's him not accepting Bitcoin doesn't have anything to do with the environment. I mean, that stuff's been out there for years, right? So I don't want to go on with a big rant about Tesla or Elon. I have no idea. Did the government give them a call and say, hey, if you want to keep seeing the subsidies, we want you to stop promoting Bitcoin. So did that spur it? Did something else spur it? Who knows? But I think he pissed off a lot of followers. And on the fundamental side, I mean, go look at Audi. Go look at the Mach-E from Ford. Go look at Volkswagen EVs. The competition is coming. Whether that has any effect on Tesla or not, I have no idea. But what I do know, and the thing that I think I know the best, is the technicals. And if Tesla loses 560, it doesn't matter why. It's going to be moving into this air pocket, as we discussed yesterday at some length. I don't think there's much here at 500. I think we're going to come down into this 460 area. And while we're on the topic, if you're talking about Tesla, you got to talk about ARK, because it is a major holding of the ARK flagship funds, and I think it's even in several of the other ARK family. And ARK has been under pressure. They are in these bubble names that don't have any earnings, and I think two things are going on there. One, psychological. I think Cathie Wood pissed off a lot of hedge fund managers, and here's this lady that came out of nowhere, starts this fund, and all of a sudden she's the fund manager of the decade or the century or whatever, and she had a phenomenal run. But they don't like that, and then they start shooting for it when they see an opportunity. And not only that, the millennial generation, or the people that are drawn to those aspirational names, they're underwater now. So they're selling. And the thing is, aside from Tesla, ARK does not hold a lot of liquid names. So it's not like she can just go, and she owns like 10%, 15% of a lot of these illiquid names. She just can't go out there on a Friday afternoon when she has redemptions and just, nonchalantly sell some battery company. It's going to create a mark, because there is not the liquidity out there that she can sell into and not really move the price. So if Tesla, one of her strongholds, starts to go down, it's going to be a self-feeding kind of thing where, she sells Tesla, then ARK goes down, then she has more redemptions, and then she has to get into the illiquid names. So anyways, we've gone over ARK on the charts in recent weeks, so the levels. So let's move on from that little sidetrack. Microsoft, just key off of 245. That's a key level on the 60-minute chart, and it's a key level on the daily chart. If bulls can pop 245 and hold it, great place to try and anchor along if you believe we're going higher. If you have been of the belief that we're going lower, you still got to cover your shorts, right? How much pain can you take? Because once you get above 245, then your next target is 247, then 249. then 252, etc. So got to let that bounce play out if they can drive it over 245. And don't forget, the gap up yesterday was not filled. So there's a gap down here from 239 to call it 241.50. Amazon, if I can get the chart to change. The free 50 club delivered again yesterday. I mean, every day. I'm not going to harp on it. I'm waiting for somebody to send me a JPEG of their license plate on the new Porsche that they bought. The free 50 club, if that'll fit, or something along those lines. Because yesterday, for example, price popped 3,200. Came back below, that was your entry point. You got your free 50, just like that. And just like the day before, popped 3,200, dropped below, down to 31.50. So today, just keep doing what works. Above 31.50, you're fine. You can be long. If it pops 3,200, you can be long and look for 32.50, etc. Fake breakouts have been getting faded all along the way. You can see it here. Here was a pop and a fade, a pop and a fade. I mean, this was straight out selling. But anyways, keep using your $50 increments. Google, simply a consolidation day, didn't do anything. North of 2240, you can be long, look for a gap fill. As long as 2240 holds, then the door is open to 2200. A break below 2200 starts getting into real trouble for Google. And remember, on our charts from before, 2200 aligns with the 50 EMA, and it aligns with daily trendline support. So 2200 is a super, super important line for Google. Netflix really didn't do anything yesterday. Just consolidating here below resistance, slightly above this momentum overshoot here. What I've done here is just bracket the price action. If you're trying to actively trade it, you can use those levels. But, I mean, for my money, really doesn't get to be any kind of compelling, oh my God, long until it breaks back above 500. Then you've got a decent shot of getting back into the prior trading range and having it run up to 507.50 and then possibly 515. Semis. Came up to the gap of Wednesday and was rejected and came back down to this 226. That, I think, is your pivot. You've got a little overshoot here, but I think 226 should work well on your pivot point for today. And with any luck, you can get a run up here to fill this gap up to 234. But I think, at least at this juncture, that's your first big resistance level. Look, you got resistance here, or support here, resistance here. So that's your first line of resistance on the way back up. If you can pop 234, then you got to run to 242.50, and that would be a major level on SMH. I want to show you a couple individual charts that I found super interesting. AMD, of course, in the chip sector. I mean, to me, this looks like a massive topping structure. You can almost visualize the head and shoulders type top, and look at the void below where it went from 55 to 74 literally in a week. There are no trades down here, guys. Absolutely none. And now this monster fade from earnings up here at 89, straight down to support, lost all the moving averages, cut through the 200 like it wasn't there, and down here at 74. I would highlight that on your charts, because you break below that and the ball gets rolling downhill, there's not going to be anybody home. BABA, same deal. This 215 is a key level. You get a kickback rally into 215 that stalls. I wouldn't hesitate to put a short on there. Cigna was a long idea from the other day. Doing great. If you got in, we had talked about it right down here in the 250, 253 area. Got a big push and is holding the 8-day. And I think what's interesting here is during all this turbulence, hasn't phased this at all. I mean, it's going up. It's not pulling back or anything. So managed healthcare and healthcare in general, that defensive nature of that sector is really helping out this trade and in general that group. JP Morgan, we had called for a long on this breakout against 157.50. It has toggled between 161 and 157 over the course of the last week. The breakout is still intact. So if you like it, you can set your stop here just below, and or you can wait for a breakout above 161 or 162 right here in this little box, and then set your stop below that. But I think of the groups that have been doing a little bit better, financials would be one of them. Okay, didn't mean for the tape to run this long this morning. If you're new here, I certainly appreciate you visiting. If you find value in having all these levels, having a morning game plan set out for you, having some trade ideas, please hit the subscribe button and the alarm bell, and you'll get my content. Jump over in the show notes. There's a link there. You can register for all my content. You'll get midday updates and other content sent your way, and you won't have to go hunting for it. Longtime listeners, give me a thumbs up. Give me a positive comment. I really appreciate that. And I hope you guys have a good wrap up to your week. I'll be talking to you later today, I'm sure, on stuff that I see. So finish the week strong. Think about risk as you head into the weekend. And let's see how we wrap up. This has been Chris Buss with Traders Profit Compass. Talk to you next time.